Evening, guys, and thanks for joining us. This evening, we're talking about mortgage protection, and we get a lot and lots of questions around mortgage protection every week and every day. So I thought it'd be important just to have a chat about it and help people understand it. And the idea is, first of all, get under the hood of mortgage protection. Well, what actually is it and how does it work, and give you a better understanding of all of that. And then figure out, well, listen, how do you actually make sure you're getting best value for money, and what type of contract, and is it about money, or is there other things that you should look at when it comes to mortgage protection? So we're just going to share a screen with you guys, and we'll get at it. As I say, it's a nice relaxed session this evening. If you have any questions or queries, please, by all means, put up your hand. There is a chat option in the system there as well. So if you have any questions, by all means, send in your chat questions and I'll certainly get to them. We're also going to be doing some live calculations in mortgage protection in a little bit. So if you want me to price a mortgage protection that you've got, a little bit of detail that I need would be your age, the amount of cover that you've got, and the number of years that you need the cover for, and obviously then if you smoke or not. So I'll be able to give you some quotations as well as we go. So guys, whole idea of mortgage protection. Well, first of all, who are we and what are we? So if you don't know who we are, we're financial advisors and mortgage brokers, and I've been in this industry since 1992, so I'm at it a good while at this stage. I established Advice First in 2005, and we're regulated, guys, with everybody that you'd expect us to be. Obviously, we're regulated by the central bank, and we have all our professional indemnity insurance and all the rest. So that's a little bit about us. On the left-hand side, what do we actually advise on? So you can see there, from everything from mortgages right through to savings and investments and pensions is what we actually do. So today, guys, well, what is mortgage protection? And this is a question we get a lot is, well, what is it, and what's the difference between mortgage protection and life insurance or life assurance? And the honest answer is that there isn't any difference. So a mortgage protection is it is a life insurance contract. It pays out if you die. There are certain differences between, say, a mortgage protection plan and an ordinary traditional life insurance plan. And the idea of a mortgage protection is that it pays out a lump sum on death. It's a tax-free lump sum, and it's to help clear your mortgage balance. And I say help clear because you're going to see later on in the presentation, there is no guarantees that it will. So we're going to talk a little bit about that. I know a lot of people don't know this, but your mortgage protection is not guaranteed to pay your life and to pay off your mortgage balance. So with mortgage protection, there are other things that you can add into it. Mortgage protection in itself is just life insurance. So it pays out on diagnosis of death. Wonderful way to put it, but there you go. If you're diagnosed with cancer or a heart attack or stroke, you can also have your mortgage paid off. And that's a thing called serious illness cover or critical illness cover. And you can build that into your mortgage protection. And we're going to look at a couple of examples around that later on as well. These are the things to be aware of. So a couple of things that when we explain mortgage protection to people, they can actually get a little bit of a shock when we actually say these things that, well, first of all, mortgage protection in itself is the cheapest form of life insurance. There is no cheaper model of cover. It's not always the best option, though. It is always the cheapest. And it's the cheapest for a number of reasons. And one of them is the fact that the mortgage cover or the life insurance cover reduces over the term of the contract. And that is why it is cheaper than traditional life insurance, because at the very outside, the premium is set because the companies know that the life insurance is going to be reducing over the term. So therefore, it is a cheaper form. The amount of cover is not guaranteed to clear your mortgage. That's a very interesting point. And again, lots of people don't understand that mortgage protection isn't guaranteed to pay off the mortgage. And the thing to remember is that your life insurance doesn't talk to your mortgage. And I'm going to show you a couple of examples around this and how it actually works in practice in a little second. Some lenders also, and this is a point to be very, very aware of, some lenders assign the policy to themselves, which means that they actually own the contract, which means that if somebody that's insured on the contract dies, the money is actually paid to the lender and not the family, which is great if that's what you want. And it's great as long as you understand that. But if it's not what you want, you need to be aware of that. So if you have a mortgage protection in place, find out, or if you want a little bit of help, give me a shout and I can help you figure this out. Is it actually assigned to the bank, or actually does the money be paid out to your loved ones and to your family first? Or does it go to the bank first and then whatever's left over is paid out to your family? But it is an important point to kind of grasp, guys, as to what option, what way is yours actually set up. And a lot comes down to which lender you're actually dealing with. Okay, a little bit confusing, but when I said here that the amount of cover is not guaranteed to clear your mortgage, I want to show you an example of a mortgage and a mortgage protection that we did quite recently, and just to show you the interaction between the mortgage and how the policy works. So we're looking at the mortgage first. So I've done here is basically what they call a amortization table, and it shows a mortgage over 30 years. Now, this couple borrowed 254,000. And at the very, very top up here, you can see year one and the first 12 months here. So, sorry, the first 12 months are up to here, beg your pardon. And then you can see it goes annually after that. So I've looked at year 10. So in a year 10, 30-year mortgage, borrowed 254,000. In year 10, the balance of the mortgage is 199,772 euros. And by the way, if you want to understand how a amortization table works, I'm happy to walk this through. For anybody that has or has a mortgage, we can certainly walk it through and show you how the payments of your mortgage breaks down. So that's how a mortgage works over 30 years. But how does the actual or the mortgage protection work that we put alongside this? Now, I said earlier that you can add other covers into your mortgage protection. And this couple wanted serious illness cover in there. And they wanted that because one party to the loan has a history in their family of cancer. And they wanted to make sure that if they were diagnosed with cancer, that the mortgage is paid out, even if the cancer isn't terminal. And that's what serious illness cover does. It's on diagnosis of the illness that the mortgage can be paid off, completely paid off. So that's what this couple does or did. And you can see in year 10 that the actual life insurance, it started off at 254 along with the mortgage. And then as the years go by, the mortgage protection falls in value alongside the actual mortgage. Now, you can see that there's 199,000 in the mortgage and there's 217,000 in the life insurance. That is because we set the life insurance to fall slower than the mortgage. And what I mean by that is, when you take out a mortgage protection, the interest rate is set on how the mortgage protection is going to reduce over the years. And it's important to make sure that it reduces slower than the mortgage. Why is that? Because if it's reducing faster, then you'll have less life insurance than you will have mortgage. And that is what I mean by it's not guaranteed. Nor does your life insurance talk to your mortgage. If you decided, well, this is my mortgage and I'm going to pay this over 30 years, and the interest rate here on this one, as you can see, is 3.95. Well, what happens if you change that on the way through? Let's say in year 9, you got sick and you stopped paying your mortgage. Well, now the interest rate, your mortgage balance isn't falling. Let's say you paid off a lump sum. You were lucky enough that somebody gave you money, or you won some money and you paid in 20,000 or 30,000 off your mortgage. Well, your life insurance doesn't know that. So the life insurance doesn't automatically correlate with your mortgage. And this is why it's not guaranteed. If the interest rate shot up on your mortgage, but your mortgage protection is geared, let's say, at 6%, but your mortgage cover or your mortgage is actually 16%, well, then you've got to make sure that the actual balance. And this is why it's so important to review your mortgage protection on a regular basis. And it's important to understand that it is not guaranteed to pay off your mortgage. It should and ought to, and obviously if you keep an eye on it, it will, but you need to keep an eye on your mortgage protection. And just because you buy it and put it in place regular reviews, at least annually, guys, to make sure that it's still on track to do what you need it to do. Okay, insurance that is needed for the mortgage. And this is where lots of lenders try to complicate things a little bit. What you actually need for your mortgage. The requirement for a mortgage is life cover. Whether it's mortgage protection or whether it's traditional term cover is up to you. It's what you feel is best for you, and a good advisor will take you through both. And then you decide, well, which one is right for me in my circumstance, or which one is right for me and my family and our circumstances. But all you do require for a mortgage is life insurance. You don't require any other kind of personal protections. You do also need house insurance, though. So it's important that you work on that one. But in terms of needing for the mortgage, house insurance and life cover, that's what you need. Now, what is recommended and what's advisable, though, is to have things like salary protection. So if you're not able to work through stress, let's just say, because unfortunately we see this quite a lot. So if you're stressed out and you need time off work and your wages stop, well, now how do you pay your mortgage? If you get sick, how do you pay your mortgage? So things like salary protection, albeit that it's very, very advisable, and we would advise people to make sure that they have enough to pay off the mortgage even if you can't work. It's not a requirement. Serious illness cover, likewise, if you want your mortgage paid off, or if you want a tax-free amount paid if you're diagnosed with a serious illness, build in serious illness cover. Not a requirement, but it's certainly advisable if it's affordable. And you can insure your hair to your wellies and everything in between, but you've got to have a life as well. You've got to have a holiday. You've got to have a night out. You've got to have a bottle of wine and a pizza and a bag of chips in on time. So there's no point having all these wonderful, wonderful insurances if you can't go to the house. There's no crack in that either. So it's about getting the budget right, putting the insurances in place that's right and affordable. And that's where advice comes in, guys. It is hugely important to sit down with a trusted advisor and just walk through, well, listen, what do we need? What's important? And what's affordable? This is the big one, guys, our recommendations. And this is where we're going to show you a couple of things in this one. So our recommendations, the first one, and always our first one, shop around. Do not take your mortgage protection with your lender. Your lender will encourage you to take your mortgage protection with them. Your lender will try to put you in a situation where you feel that you must. You do not must. In fact, we would strongly, strongly recommend that you do not do that. Do not use your lender for your mortgage protection. Why? Because they give you theirs. That's the reason why. And if we walk through the lenders in Ireland, Permanent TSB is a tied agent of Irish Life. They only can offer you a product from Irish Life. New Ireland is tied to Bank of Ireland, so Bank of Ireland can only offer you products from New Ireland. AIB have their own banking arm now. They were tied to Irish Life. They have now got their own life insurance company. They reset it up. They had it years ago. They have set it up again. But they're not going to tell you, listen, you know what? There's another company outside of us that gives you a better rate. I mean, Bank of Ireland is not going to tell you, our price with New Ireland is actually dear compared to maybe Royal London or Zurich. So they're not going to tell you there's a cheaper option. So shop around, use a broker like ourselves, talk to your own financial broker. They're able to take you through examples. And I'm going to actually stop sharing this one and reshare a different screen. And we'll actually walk through a couple of live examples in terms of serious illness cover. Sorry, life cover. And we're going to actually take a look at a couple of examples. And we'll price real life examples. So hopefully you can see a change of screen. And what I'm actually doing now is I've gone back to that mortgage that we looked at earlier where the couple were borrowing 254,000 euros. And the man on this example was age 38 and the female was 32. Neither of them were smokers. And by the way, that's how the price of life cover is actually measured for the most part, is your age, your health, do you smoke, do you not smoke, and then obviously the amount of cover you want and the term. So this couple wanted to borrow 254,000 euros. They wanted the mortgage for 30 years, so you have to match your mortgage protection to that. If your mortgage is 254,000, you don't put in place 250,000 life cover. It won't be acceptable. It has to match exactly. It can be more, it can't be less. And the term has to match exactly. Again, the term can be longer, but it can't be less. So here you can see that for a mortgage protection, we can build in life cover, we can build in serious illness cover. This couple wanted accelerated illnesses. And let me just show you the difference in prices for this particular couple. And this is what a good financial broker does. They shop the marketplace. Now, there are loads and loads and loads of different kinds of contracts out there. And you can see where we've blocked off a lot of them because all we're interested in is mortgage protection. And mortgage protection is that the policy and the value of the cover reduces over the term of years. And by the way, this is all the companies that are priced. So in broker world, in my world, in broker world, we have 5 providers. And the difference in price, the cheapest is 146 euros, but the dearest is 167 euros. In fact, the dearest isn't, it's 172. So that's 26 euros a month. Now, if you bought that dearer contract, it's 26 euros a month by 12 months by 30 years. Now, that's a lot of dough. So by using a broker like ourselves, so if I take 26 quid by 12 by 30, 9,360 quid. So by using a broker like ourselves, this couple saved 9,000 euros over the journey of the mortgage. That's just on the policy. That's not including on the fact that we got him a very good deal on the mortgage as well. That's just on the policy. So the whole idea there is just to give you an idea of what it looks like to price around. So let me simplify this a bit as well, because that's a slightly confusing and there's a lot in there with the serious illness cover and everything. Let's just say this couple only wanted life insurance, just life cover, nothing other than no serious illness cover in it, just life cover. And again, obviously it's going to be a lot cheaper because there's no illness cover in there. There's no cancer cover. There's no heart attack cover. You can see the same contract, a joint life mortgage protection. The cheapest is 29 euros and 55 cents. That's life cover only. You die, they pay. That's it. There's nothing more sexy in it. That's it. But you can see that the dearest contract is 34 quid. It's obviously not as dramatic because the amount of money is less, but it's still the guts of 5 euros a month for 12 months for 30 years. So there is savings to be had, and it is hugely important to shop around. Not only that, but a good broker will also tell you what's the underwriting criteria. So are you going to be asked for a medical? Are you going to be asked to present to your GP? Is there any other additional medical information that we need to provide? And you can see here with us, we're quite quickly to tell you that there's not. But if the level of cover was high, maybe that will come up and say, listen, you need a smoker or a codeine test. If you said you're a non-smoker, you might need other tests depending. But for this couple, there wasn't. So this is why I'm showing you that, guys, a couple of live examples, just to show you that shopping around is hugely important when it comes to your mortgage protection. And definitely do not take it from your mortgage provider, because they will not and cannot actually. It's not that they will not. They cannot tell you there's a better option. Don't overinsure, guys, is the other recommendation. And what I mean by that is, if you're being sold products rather than being given advice, there is a tendency to overinsure you because people are selling you stuff rather than giving you advice. Just be wary of that and always question, well, am I being sold or am I being advised? If you have an existing mortgage protection, review it at least annually. Reason being is, we've got to make sure that the level of cover is going to be enough to pay off the mortgage if somebody dies. There are changes in your life. There are health changes. What I mean by that is you may have been a smoker when you took out your mortgage protection and you're a non-smoker now. You can actually get your policy reduced because you're a non-smoker. Smoker rates are higher. Non-smoker rates are a lot cheaper. In fact, it could be anything up to 25–30% cheaper. So it is important. Other things like, well, I was diagnosed with stress prior to taking my mortgage protection and they loaded me. They put an extra premium on me because maybe I was overweight. Maybe I was suffering with X, Y, and Z. There may be a reason why the life insurance company charged you more. Your BMI was a little bit different. You've lost weight now. All of those things can have a positive impact on your mortgage protection. And your financial broker will take you through those. Now, if you talk to your financial broker and there are negative things in your health, you don't have to change. You don't have to tell the life insurance company. If you've taken up smoking, you don't have to tell them. So you'll only go back to them if it's positive and it's going to act in your advantage. If it's negative, you leave your existing policy alone, but a good financial broker will take you through that and be able to help you identify whether there's any better options. And sometimes it's not just about saving money, it could be about getting better cover. A few of the policies, the policy changes here as well. There's lots of companies that have added on other bits to their mortgage protection, and these add-ons are very, very valuable. And some of the older contracts wouldn't have them in there. So talk to your financial broker, review your existing mortgage protection, make sure that the money that you're paying is best bang for buck and that you are getting the best cover for the money that you can afford to pay. So guys, questions. We get lots and lots and lots of questions about mortgage protection. And we're going to run through a few of them here. Now, a few of them we've already looked at, but what details do I need to provide when applying for mortgage protection? So obviously, we're talking about the amount of mortgage, the term of years. Do you smoke? What is your age? Is there any health conditions? There is a series of health questions that you fill out on your application. That's really about it. Now, next question, will I be required to undertake a medical examination? That greatly depends on a number of things. The level of cover. It also is dependent on what you say on the application. So if there is a medical condition, if there is high blood pressure and you haven't got your last 3 readings, say for your blood pressure reading, yeah, they may send you for a medical examination. If you've been recently diagnosed with diabetes, all of these things. So a medical examination, the way the life insurance work, is they generally send a nurse to your house now. It's called a nurse med, and they'll send a nurse to your house to do the medical examination. If they don't need a medical examination, but they need some additional medical information, generally they'll just write to your GP for a private medical attendance report. The life insurance companies pay for that, though. It's not your gig. They pay for that. Can I make changes to my mortgage protection? Interesting one. In general, no. Most mortgage protection plans, because they are at the cheaper end of the protection, a lot of the small print and a lot of the added extras is stripped out of there. Things like convertible options. Now, you can pay a little bit extra to add this in, and if you pay an extra 5% to your mortgage protection, you have the option then of making amendments to the contract. Again, talk with your financial advisor. It is sometimes a good idea not to buy the cheapest off the shelf. Sometimes a little bit of extra money will give you a lot better contract. So take the time to get advice, guys. What happens if my mortgage protection, if I pay off my mortgage early? Great question. You do not have to keep your mortgage protection tied to your mortgage. If you're lucky enough to be able to pay off your mortgage earlier, now you have a decision. Do you want to keep the cover? And if you want to keep the cover, then you just keep it. And the money will be paid out to your family. If you don't want it, you stop it. Again, take advice, because there may be a very good reason to hold on to the cover. Is the mortgage protection tax deductible? Now, I presume we're talking about the premium, the cost of actually paying for the mortgage protection. No, it's not. All of those have been done away with years ago. Used to be years ago, but not anymore. Is mortgage protection the same as repayment protection insurance? No, it's not. In fact, they're very, very different. Mortgage protection will pay out, will clear the mortgage, well, I said earlier, there's no guarantee. It will help clear the mortgage if you're diagnosed dead. Repayment protection pays the mortgage premium, or what you're paying on a monthly basis, if you can't work. There are very, very few of these guys left in the country. And you would have seen over the last number of years in the UK market where there's a series, and you see them on, you hear them advertising for a few years there, of PPI claims. Because repayment protection was missold a lot, and there's lots and lots of claims on it now. Most of the players in Ireland, there was 3 or 4 that did that particular protection, is now stopped in Ireland, so they're not there anymore. So it's not the same. And in fact, it's very, very different. Continued? Okay. Can I use an existing policy to cover my mortgage? Absolutely. Absolutely, you certainly can. And don't let anybody tell you you can't. Proviso to that, though. The existing cover must be at the same level or greater than the mortgage cover. So if you're borrowing 200 grand in your mortgage and your existing covers 140 grand, that's not going to be acceptable. So, but you can change, you may be able to change your existing. The term of your existing plan must also equal to or longer than the mortgage term. So if it can fit, yes, you absolutely can. And by the way, if you have got an existing contract, it's always worth checking out, can it be used for that purpose? But if you've bought your existing contract to protect your family or provide protection to your family if you die, you giving it to the mortgage company, it might not be the best option for you because now your family's not protected, if that makes sense. So again, it's about getting advice. But in theory, yes, absolutely, you can, if it fits. Do I have to take the mortgage protection with my mortgage provider? I've answered that one. Flat out, no. Absolutely, you do not. You do not have to. In fact, do not. Just don't. At all, don't. That's the best I can say on that one. What happens if I stop paying my premiums? Very simple. Don't die. Because they won't pay. So if you stop paying your premiums on your life insurance contract and you stop in June and you die in July, no dough. Done. So don't die if you don't stop. If you stop paying your premiums on your mortgage protection, don't die. Good luck with that one. Who needs to be covered in the mortgage protection? Whoever's on the mortgage. If you've done a single life mortgage, now there's a difference in who needs to be and who do you want to be. Who needs to be? Whoever's on the mortgage. But if you've taken a single life mortgage, but you've got a partner, a boyfriend, a girlfriend, or whoever's in your life, even if you're not married, they may not be on the mortgage, but you might want them protected on the mortgage protection. And there's no issue with that at all. They can be on your mortgage protection. They may not be on your mortgage. Again, take advice. And by the way, having two people on a mortgage protection is not doubling up on the premium. You might find that your partner could be insured for not much more than you're paying already. We looked at one a couple of weeks ago. The man had the mortgage before the couple got together. He was paying 25 or 26 quid on the mortgage protection. And when we added the now partner into it, I think it worked out at 31 quid. So he had her insured for the mortgage that if she died, we paid off the mortgage as well. Huge, huge benefit for him, but not a lot of cost, which is brilliant. If I die, who is the benefit paid to? And this is what we said earlier, guys. If your lender has assigned the policy to them, they get the dough. If it's not assigned, your family or your next of kin or whoever you've willed it to will get the dough. It's up to them then to settle the mortgage. So it depends on, one, who the lender is and what the lender did at the time. Again, seek advice. If you don't know the answer to that, give us a shout, hook us up. I'll help you figure that out. There's not a problem with it. How soon should I apply for my mortgage protection? As soon as possible. As soon as you get your mortgage approval, or even slightly before that, especially if there's health history, if there's issues in your health, if there's any, let's say, if there's a BMI issue, if there's a diabetes issue, we had a couple quite recently that unfortunately one partner has been diagnosed with HIV. All of these things slow down the mortgage protection application, which means that if you haven't it in early enough, it'll slow down the drawdown of your mortgage as well. So for us, in terms of advice, get your application in as soon as possible. Get yourself approved. Doesn't necessarily mean you have to fire up the policy. The policy can sit there to whatever time you actually need it, but get it in, get the paperwork in, get whatever medical evidence is required, get it underwritten and get it ready to go. Because the last thing you want to do is the solicitor's going looking for dough from the bank, and suddenly you've got a bottleneck because the bank will not pay out the money for your mortgage unless your house insurance is in place and your mortgage protection is in place. So get it all ready to go, guys. Guys, that's pretty much all I have around this. So my details are here. I'm going to just check and see is there any questions. So let me have a wee chat here. Where can I find where can I find all these questions and your answers? Website? guys, to be honest, is the best place to go. Go in and have a look at our website. A lot of what we advise on is on our website. There's lots of frequently asked questions. Have a look at it, guys. Our address is there. My number is there. My email address is there. If you have questions or queries, or if there's anything that you're unsure about or you want to know a little bit more about, do not hesitate to give me a shout and hook us up. As I say, we're here to give advice, guys. Use us. That's why we're here. So I appreciate you taking the time, guys. Any questions or queries, by all means, come back to me, tomorrow, whatever day. And look out for our next seminar next month, or next webinar. Thanks for joining us, guys. Bye for now.